Okay, this article has been popping up on my feed a ton, and I wanted to get into it because I think it's actually quite a misleading article. So the premise of this article is that unfortunately this woman's parents both died in the same year, and she was hit with a $660,000 tax bill, and she's mad at CRA. Now, when the first parent died, the RSP that they held was transferred to the other spouse on a tax-free basis, and this is pretty normal. But when the second parent died, that RSP was treated like income. It was a deemed disposition and would be taxed in the hands of the estate fully as income. So $715,000 in the province of Ontario is about $376,000 in taxes, because again, it was taxed at the highest rate. Ideally, what you would do is you would have this spread out. I'm sure they didn't expect to pass in their 60s, but you would spread out the withdrawal of your RSP so that you can actually minimize your taxes. But where it gets tricky is this cabin. They had total tax of $669,000. And if we take out the tax that was due on the RSP, we're left with about $293,000 in tax on the capital gain of the cabin. Now, capital gains on your primary residence are not taxable, and it was their primary residence for the last 5 or 6 years of their life, but there was a capital gain from 1998 when they bought it to 2019 when they moved into this cabin. Now, your tax rate on capital gains is about 25%. So only half of the gain is actually taxable in Canadian tax law. And then if you're applying the highest rate of close to 50%, let's say, because all of this income was taxed in 1 year, you would have a tax rate of about 25%. So this means that the cabin had to be worth over 1.1, close to $1.2 million. So while I am obviously sad for this person losing both their parents in 1 year, and that is a huge tax bill to pay, they are painting it kind of like a little bit of a sob story, in that they had to use the entire RSP, what was left of it, to pay for the taxes, and they had to keep the cabin. They could have also sold the $1.2 million cabin and used some of the proceeds there to pay the taxes and then use that money for something else, but they chose not to. So I don't feel totally bad for them in the situation of having to pay too much taxes. I think they paid their fair share. The parents also could have paid the capital gain tax when they moved into it as their principal residence, but they chose to defer it into the future. They probably should have had those conversations with their kids, though, before they ended up passing. All this to say is just be careful what you're reading out there. Sometimes I think we paint things in a light that isn't actually true.